Welcome, it's the Market Sniper here. Yep, gold we're talking about, and gold today on Monday, following the payrolls number of Friday, has now run our core target. That was a bull flag as described before, so just as a reminder, substantial up pole, 1160, that was from June in 2019. By the way, that included the shutdown of the entire planet in March 2020. A dip only to go to new highs. Nice little flag there, and on and up. You can see that flag target would have been met with that up move as well to a localized high around 27.5. Now then, for an extended period, gold continued to disappoint. Actually, it was a tough time to be precious metal bull. You came up to that 2K level. Remember that the first time in 2011 you stopped at 1927. So this represented a marginally higher high to that event. We'll go out to the monthly and show you that. 2011, you stopped at 1927. Typical of the precious metals, bulking at the next round number high. The same happened with regards to the 1,000 before the 1,000 was eventually broken. And then you wound up again at the 1,000 and did an ascending upside HVF structure that took you higher. We'll show you that in the monthly in a bit, but let's just show you the three sell-offs that occurred. This was the mildest, once, twice, three times. Fourth time, minor pullback, run, and then you broke and supported on the 2K. We've covered this many times. Regular viewers will know. This gave you a squeezy Japanesey, an HVF method with an asymmetric reward to the upside with a very tight risk. You could trade the HVF and take off on target, or you could be smarter and recognize the larger bull and thereby benefit for a year on a leverage trade from February of 2024 to February of 2025, and grab yourself the hypotenuse of a very steep efficiency. We call that the gradient of efficiency, the line of efficiency, the gradient of efficiency that is done, that you require when you are utilizing leverage trading, because there's a cost when you borrow. Any leverage trade has a daily carry of some form. If you look at that level, that was very well earned. And you took about $900 over that year, which, starting from a place not much over 2,000, is essentially between 40 and 45% in terms of return on that year. Remember, leverage would have allowed you to put a big multiple on that. The overall R's 38.02. We've covered this before. This is minor recap. That's the bull flag, and of course the HVF we highlighted was also providing the same target, hence why we say it's a good place to take off on your leverage trading. Remember, we remain macro, bigger time frame invested. Short, medium term, we might be neutral to a marginal pullback bias, which is not bear market, but it's a pullback, it's a churn, it's a chop, like you had during this period over here, like you had during that period. Although this was a more distinct period of upside, we think you could have a rest. This was the last rest that you had, by the way. I don't see anything as long, and I can also highlight that the rests have been getting shorter. Let's discuss that. Let's take it out to the monthly and do the big time frame now that we are saying on the weekly level a target has been made. Let's discuss that technically and see what we've concluded. So highlights real, I suppose, of precious metals. We may even need to go 2 or 3 months just to squeeze a lot of history in to make this point really hammer home. So there's your 70s to 80s. This was a huge bull market run. By the way, a reassessment of the targets generated by that huge bull. That was falling wedge structure from the 80s into 2002. This is macro charting. People say technicals are for timing. Well, go up to a bigger time frame if you want big moves. That was your run up from the 1970 low to the early 80s high as a result of Volcker devaluing the debt and the debt-based issue as a result of the Vietnam War. Mentioned this as well, being devalued down. Of course, America was in a much stronger position, exported and manufactured a lot more during that era. They don't have those options anymore available to them. They're essentially tech and a small amount of manufacturing. They import a lot. This target comes out of the projection from that falling wedge from there, and that takes you to 6.5. So on the macro, those things still hold. We remain investment long. On the short medium time frame, we are saying a little bit of a pause and gestation period. By the way, that 1980, until you pass that level, you would have waited till round about the crisis of 2008. That's right. So you're in this point over here. That was some duration. And I'm doing this for a reason, because we're going to talk timelines. There was your high. That was essentially, call it, we're in 3 months, so it was the first quarter of 1980. So that was the beginning of 1980. Before you passed that level again, around the 800 mark, you were in 08. Don't forget, Brown's bottom at around 2 and 3. That was 0123, around the $250, when Gordon Brown allowed the name on the clipboard for Britain's gold to change to one of his banker friends who knew that the inflation cycle were coming, and he sold the Britain's family silver on the cheap to the cartel. That's how the world rolls, I'm afraid, and he did it right there, picking the bottom, what turned out almost perfectly to do exactly that. So with that said and done, we go and we check a little bit further. There's also a bull run over here that was from Brown's bottom, yep, to the 1927 high, which was 11. And that is projected again from the lowest point here, and we have a 7.8. So there's some big targets still to come, but they get pushed out by timeline. Now here's what I want to show on timeline. You've got 80 to 08. That is 28 years. 28 years cycle. Then we take the next cycle, and this is quite important because there is a quickening. 2011, yep, 2011 till we ran 2075. How long is that? 2011. Let's get the date and number for you. There it is. It was 29 years. So you went from, wait for it, 80 to 2008, the better part of 28 years, to under a decade, 9 years. And then we had the move from here that kept us in that continuation pattern that's given us our most recent target. That took you up to February of 24 before you broke and took out 2075 for the final time. When was 207? 2075, my apologies. It was July 2020, and you broke October 23 into the year end. So July 20, so you're halfway through the year. October 23, it was kind of the beginning of the next year. So let's say half a year to get to 21, and then 21 to the beginning of 24. Yeah, you're about 3.5, 4.5, call it 4.5 years. So you've gone 9, 28, I think it's 3.5 actually, 3.5. And if we are accurate to say calling a rest before the 3,000 mark, the light blue mark is run, unless we have a major blow off spike and then a sell off, it's going to be a shorter duration. In fact, the durations are getting shorter and shorter by some multiple. This is a substantially smaller than that, 9 years, almost a quarter. 7 years would be a full quarter. Call it somewhere between 3.5. Then, of course, you've dropped by almost 3 to the 3.5 years. That was back end, the second half of 20 to the end of 23. And now, what do we expect? Well, we expect even less. I don't even think it's going to be a year. I think it will be months. It will be counted in months, but we don't know. This is, of course, a much smaller target, this little flag, so you can expect the rests also to be shorter too. However, pullback sideways, short, medium term, a little bit neutral to mildly bearish potentially on leverage. Investment staying the whole game. The real reason on the big time is targets beyond these. And of course, there's the possibility of a full-blown reval. That could be blow off numbers and take you straight to the top. So a little bit of a reminder on the macro. We are not shorting gold. We are not even saying you shouldn't be investment gold. We remain investment bullish for higher targets. We just think it's not the time for leverage trades anymore on gold. So what does it mean? What does it mean? What could be? What could it be the time for? What could be moving? Well, we feel there's probably a period of dollar dominance, and we've spoken about the USD Korean won trade. which is a currency trade that's seeing this particular currency devalue immensely. Again, this is worth seeing on a monthly time frame. This is a triggering event. It reminds us of our localized high call on XRP and the macro call, which is looking for $19 for those that follow our crypto channel. But this is a triggering event. You're having a little bit of a pullback, but I think dollar dominance could reassert. Tariffs are inflationary. Inflation pushes up interest rates. Pushing up interest rates will see the dollar appreciate because it gets more expensive for the foreign nations that are funded in dollar. Economic hitman to do installations of power stations by military industrial complex, weapons from America. They all put it on the debt credit card in dollars. They need a payback in dollars. As inflation goes up, interest payments go up, etc., etc. They have to print more of their currency to get more dollars to pay a bigger price. You get a ever escalation in the dollar. And that could see to a blow-off event occurring. We see well through 2750 on Korean won. That's one. The other thing we could show you of some value, and you could come and find out more about what we do beyond this, because I'm going to stick with this final tip. If you want to stay inside the the precious metals, not petrol, the precious metals complex, you could in fact look at platinum. So what tends to happen when it becomes clear that gold is in a more sustained view, this is not typically bullion, but serves as bullion on account of its scarcity. You'll find 20 ounces of gold for every 1 ounce in platinum you find, and it's South Africa, Russia, and that have the bulk of it. So it's harder to find. And this is in an upside HVF setup after an immensely long falling, squeezing event that actually mimics the oil market very, very closely. The events of, you guessed it, CV19, seeing the spike out the bottom of what is a massive 3 impulse falling wedge on platinum. You chopped and churned around here and then dumped before eventually breaking. You had a substantial pullback to that splitter. You've been winding up for some time on platinum, and you've been able to buy platinum sub $1,000 until literally the last week or two, and it is substantially cheaper than gold, and it's not always been that way. It is rarer, as we've already explained. Let's just divide that by XAU USD and just show you this in further detail. So technically platinum is looking like it is going to get to where it needs to go eventually. That is in regular scale a huge falling wedge. Don't forget, at one point platinum was 2.4 times more expensive, and for most of my early years platinum was substantially more expensive than gold. Now we actually have it sub or at the base of $1,000, around 1,004 on this very moment, and it's about a third of the cost of gold. Yet everything you're required to do to find platinum is the same, only it's harder to find, and there's less of it around. So just bear that all in mind when you look at this chart. My assessment is this downside relative to gold is flattening ever more, and you're squeezing inside a squeezing, and at some point we could see that HVF in the dollar terms breaking to the upside, and you could start to see outperformance from platinum for a sustained degree, with even in an environment of dollar strength potentially, on the basis of its rarity. Can I point out that China has brought sanctions on account of precious metals, what it considers precious metals, and you will find particularly the rarer precious metals might be of great interest in terms of that, where they are utilized often militarily or in other ways. Okay, so platinum could be a potential hideout for your bullishness in precious metals, whilst gold has a little bit of a rest. Unfortunately, as gold-silver ratio, we do not feel silver is yet ready. Let's double confirm that, so that you can be verified of our opinion in this regard. But gold and silver, this is looking like a breakout to the upside still. Last time I looked at it, and I want to redo it again. And as you can see, gold is outperforming, and this is driving upside. So right now, that's a break out of, to the upside, a continuation pattern that has been based in and around the 75 level. And it doesn't matter how you cut it, as a flag or a squeeze on the 75. The continuation pattern is an upside one, and you have revisited to the downside and you're trading up. This said, again we highlight, we are not bearish gold. It could still have a flurry of activity. We could be too early with our leverage longs. We are still investment. We will still be gaining. One miner that we've been in for an extended period that you won't know about is Orla Mining, for example. It's one that is also in an upside HVF, bang, and has been throwing it down rather well for us. 3 impulses, great break, nice little primer squeeze in there. Community find, break up, return move, small pennant on our first interim. This looks like on the open today it might make second interim. With gold resting a little bit, you could have a pullback before later upside through $10 when you could have been buying this with us in and around the low 4s on its primer wind up in the funnel, which is 2.5 times a pretty good return, and something you missed by not being in the community. The link is below. Book a call. This is the period. Certain miners will be outperforming other miners depending on their numbers, depending on their fundamentals, depending on their degree that they've hedged their positions, selling forward in the markets, their gold production, etc., etc. So all are very good, and we're expecting 1016. By the way, this is a big structure, the first in a new trend, and we anticipate further overperformance. So this is one where we would actually hold over percentage of any leverage positions beyond the 1016, so it would not be a full closure. So that's a little bit of what we've had got for you on the precious metal side. This is what we do. This is reset, guys. This is what's coming. The tariffs are inflationary without a doubt in my mind, and that could cause the likes of, let's do the US 10-year for you. It has been pulling back a little bit recently, but the anticipation is very soon the effects of tariffs will work to the upside. That, of course, was our low call. We said technically that was the final capitulation and a turn that went in and around the August of 2020 period. That was our turn in the bond market's call. Not a market we made any great number of calls, so it's quite unique for that. And you'll probably see that, yes, you have broken down, you got bought back. We're in the early part of a new week, Monday today, so there's nothing to be read or interpreted in this, but there was a real buyback on that. That's the weekly time frame. If we have a look at the daily, who knows if you'll make this mini head and shoulder down or whether this will start turning sooner. But overall, our bias is to higher rates. It's seen in the fact that this falling wedge broke here and is doing its return move right now. Higher highs, higher lows, which will lead to stronger dollar at the expense of foreign currency volatility, particularly for emerging nations that have borrowed in dollars. And also, as we've mentioned, something coming for Korea, but you'll see the Aussie and the Canadian also has been weakening and is in structures to the downside. So we've given you quite a lot of heads up on an FX trade, our update on precious metals. The fact that it's not a bear call, we still see Orla going higher. That's likely on a minor re-rating, and the gold price holding up reasonably well. So more and more with the duration of time, people having to price in higher expectations. The market is so bearish, having been so overlooked and unloved for so long, that they're not recognizing that things have changed. And the debt-based crash is, in fact, the beginning of gold becoming a reserve asset again, being recognized as such at the expense of the debt markets that are due to collapse. A small reminder on that would be our TLT that we've spoken of many times, and we're part and parcel of calling short. Yes, of course, it's had a little bit of a rally recently, but if we show you the overall move from this head and shoulder, this is small beer. You broke out of a rising wedge and you traded to that low. You're having a small up move, but in the long run, we anticipate you will run that low and continue to the downside in what is a debt-based collapse. And no, doggy cannot save or turn Elongated and his pals, his 19-year-old computer geeks, cannot save or turn around this oil tanker in a matter of 100 meters. It's too little, too late, he cried. This is a debt-based collapse. And in fact, speaking of oil tankers or navies and everything else, with the stubbornly high interest rates America has less and less money to look after its basic infrastructure, roads and rails, and service its unfunded liabilities. There is a real crunch coming, and they're likely to master this in some form of military war. Wouldn't shock me if we go towards Iran and many other masking agents that are required for a shock and awe reset that will mask the fact that this is a debt-based collapse. Other events will be thrown up. A dust cloud will be manufactured. But you can see this is elevator collapse after escalator gains. And there's more to come. There's more to come in this debt-based crisis. And this is going to see bond money, which has been flooding into the equity markets, starting to take a new view on holding gold, given the economic times we are. And just to maintain a military-industrial complex that is 10 times larger, not to add, not to do anything fancy, the maintenance, the costs daily to put an aircraft carrier out at sea, the sailors, the oil, the everything, the planes in the air, to keep changing and refreshing ammunition, which eventually has to be used or expires. The cost of maintaining it is so high that when America has to live within its own means, it will no longer be able to do so. How do you protect yourself? Gold is one of your best protections. However, bear in mind, the Bolshevik technological surveillance grid that they intend to bring is not dependent on you being self-reliant. They hate you for being self-reliant. They seek to strip you of your assets, and it wouldn't shock me that tokenization is there to have you register your gold so that they know everything you hold, and so they can tax you out of it in due course. Unfortunately, when you have the reset understanding, you have to recognize that the certain people that have perpetuated certain things on an ongoing basis are not only wanting to win and own the bulk of everything, they want to ensure you lose, and that means becoming a ward of state, a serf, a welfare, global welfare state of UBI, where compliant people are retained and controlled, and godliness for the right of who gets to live and who gets to die by the supposed elite classes is the eventual outcome and goal. Push back against the digitization of everything else. That is your gold update on the day that it ran our target and delivered a 38 RRR. Do you know which trade will be delivering you a similar number of R's for the future? Where is your profits being rolled into? When last did you land? A patient year-long, 1 unit of risk, 38 units of gain. Just a question. If you don't have such a trade, then maybe you should click the link and see the value of asymmetric gains to highly managed low-risk trades. And by the way, you don't have to be right very often if you get 38 R's when you are. We can be wrong 90% of the time. It's not how many times you're right or wrong. It's how much you lose when you're wrong and how much you make. Finally, before closing, I did want to cover the gold divided by oil. I've looked at this the one way around, oil divided by gold, and this time it's the gold divided by oil. It depends which way around you do it as to whether it's a head and shoulder, or in this instance an inverted head and shoulder. What you have here is left shoulder, head, you have right shoulder squeezing, and you have gold moving up. So it's very important. Gold is not going to do terribly if it's still got upside targets to do. It's quite clear that we must make it absolutely clear that gold hasn't become a short. We just think it's a localized high where there could be a little bit of pushback. It doesn't even have to be for so long. The other thing is, this can go on up and meet targets if oil trades down. Even if gold stands still, but oil is selling off, this could also see this targeted move taken place. But broadly, we still anticipate moderate strength, maybe after a little bit of churn and chop. This is not a bear call. People misunderstand investing with generally over the macro and trading short term with leverage. So there's a lot of reasons, a lot of signs to understand that gold will be going potentially quite a bit further in relative measures against oil, as we're just illustrating here, and generally higher on those 6,800 and 7,000 targets. So here you go, inverted head and shoulder targets, roughly 53 barrels of oil to be secured with an ounce, possibly going to 61, 62-ish range barrels of oil that could be bought with a single ounce of gold. Quite considerable, having previously been as low at this point in and around, let's check the low, 14.81. that was quite recent, June 22, following the collapse in oil and then the reflation and run up to $129. Gold relatively still below the 2K. That's when we registered 14 ounces, 14.8 ounces, my apologies, 14.8 barrels for a single ounce of gold. Obviously moving to 61, 62 is quite some multiple from that, and that's been a trade call since the 28 level. We're now at 40, and if we meet 62, that's going to be a more than 2, going towards 2.5 times in relative valuations. So precious metals, gold particularly, still a very strong investment hold for a variety of reasons. Okay, hope you've enjoyed this video. Please remember to like, share and subscribe, and the links below. Pure Gold for purchasing gold if you're in the UK or rest of the world, and ITM trading for purchasing gold if you're based in the US. These are people that we know, that we've dealt with, and we're comfortable in putting forward, but other good providers do exist as well. Respect to you if you support us by clicking on the affiliate links below. Okay, till next time, catch you later. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us